All righty, what is going on, everyone? Welcome to the daily macro update for Tuesday, February 18th. We got a good show for you guys here today. Talking about one of the best leading economic indicators that's out there, specifically for the manufacturing sector. We're going to get into all that and more here just in 1 second. For those who are joining on YouTube, either live or watching the recording, go to the timestamp below. That'll bring you to the start since we do these live. We typically leave a couple minutes for people to join in. But specifically, we're going to be talking about two concepts, actually three. One is the New York Fed Manufacturing Survey today, as well as we got some information last week that was pretty interesting on the divergence in investor sentiment. And then lastly, we're going to be going over one of my favorite long-term indicators called the OECD CLI Diffusion Index, which I know that's a lot of words, but it's one of the best, in my view, one of the best long-term indicators that's out there. And over the past couple months, it's been signaling something that we haven't typically seen since September of 2021, which was approximately 3 months before the market top back in 2021. So we're going to be talking about all that and more here in just 1 second. We're going to continue letting people rally in here. How's it going? How we doing? Apologies about the tardiness. I know I start these around 2 p.m., but I had a couple of errands to run, as well as some other things come up. It is tax season, so we're trying to get together all that stuff too. So I apologize about the tardiness there. Who we got coming in here on TikTok? All right, we got some people on Instagram Live here. Excellent, excellent. Let me know if you guys can hear my audio as well as see my screen pretty well. Looks like it's coming in good. We'll go ahead and get started here just 1 second. All righty. Okay. We can go ahead and get started. So one of the best leading economic indicators for the United States economy is the New York Fed Manufacturing Survey, and it just rebounded from a negative number last month back into expansionary territory. And so if we take a look at that over time, you can see that it had a peak reading in November of 2024. This was the largest reading really since March of 2022. And then it then proceeded to have a slowdown in both December as well as January. And then in February, it just had a revamp up, but expectations also declined. And so the market typically reads this as an accelerating growth metric. And the reason why it's so important is because, the New York Fed or the New York manufacturing sector reaches all across the country as well as the world. And so it's a very good barometer on the state of growth. And so we continue to get information that the manufacturing sector is rebounding out of contractionary territory. But when taking a look at the actual survey report itself, we saw that input prices, meaning the prices that manufacturers pay for raw goods, also accelerated for the largest time in 2 years, meaning those input prices are accelerating. This makes sense as we take a look at commodity prices also accelerating as well. And so there's no surprise there, but it's also showing, and we also saw this in last week's PPI, the producer price index inflation, that is also what's keeping up inflation in general as well. Because if input prices are rising, then also prices will be increasing for the consumer itself. And then also too, optimism noticeably dropped in terms of the manufacturing sector. And so even though we saw an improvement, it wasn't a very strong improvement itself. Now, what's interesting is that at the same time, we're seeing a large drop-off in investor sentiment. So this is from the American Association of Individual Investors, and this shows the spread between bullishness and bearishness. And typically, when this gets down below to the 25% mark, that usually is expressed as peak bearishness. And as you guys can see, we haven't had this happen since October of 2023. And so it's very important to monitor this because at the same time, what's interesting is that you have the CBOE put to call ratio also, or conversely, at bullish extremes. And so what this is showing is that even though investors remain very cautious and they are somewhat pessimistic, they are hedging themselves by leveraging to the long side. And so people are still gambling, and this makes sense as we see that credit spreads still remain very narrow. And as you can see from the survey itself, that most investors are pretty much scared about slow growth and increasing prices from these newly imposed tariffs. And that's really what's been about over the past couple months here in 2025 so far, is that, the market has been jumping from headline to headline on these tariffs and their unknown impact of on the economy. And so ultimately what this looks like is a translation in the Fed fund futures, the target rate probability is not coming down until the July Fed meeting. And so if we take a look at the March meeting on March 19th, that is pretty much guaranteed to have a pause. Same thing with May. And so we're going to continue to experience higher for longer at these higher interest rates. And so as debt levels accelerate, as well as the interest rate stays put, this causes more headwinds in the future. And we're going to be getting into one of the longer term indicators that I like to look at here in a second. And so going over to the charts, this indicator is called the OECD CLI Diffusion Index, which I know that's a lot of words, but really what it showcases is it takes readings, leading indicators from across several different countries, namely 38 OECD member countries and several other non-OECD member countries. This is, the major G7s, as well as some other major leading economic indicators from other countries. Above 50% signals expansion, below 50% signals contraction. And this is a chart that I created on TradingView, which if you guys want to look me up, just go to Johnny Zerdy and you can find all of my indicators on there. And so when applying this to the S&P 500 on a monthly time frame, for those who are joining on mobile, let me just go ahead and fix the graph there. As you can see, that this typically front runs peaks in the market by about 9 to 12 months. And so just like we saw back in the previous bearish OECD cycle, we can see that as soon as the blue, which is the month over month, crosses the year over year, which is the orange, that typically signals the start of making sure that you're being cautious. And it pretty much starts the timer to the top of the market, historically speaking. Obviously, this could change depending, especially in this post-pandemic era. But from the previous cycles, we saw that this typically led between 9 to 12 months. And so as this flashed in July of 2024, that puts us between March and June of 2025 in terms of where a possible peak might be, which means that headwinds might be coming in late Q3 of 2025 or even Q4 of 2025. So we have to make sure that we keep an eye on that. But as you can see, both the month over month as well as the year over year continue to decelerate. And so that's why on a long-term basis, or more so a medium term, right, anywhere between 6 to 12 months, I'm pretty cautious. Medium term or short term, I am bullish on the market. So if we take a look at the S&P 500, we can see that it is in a clear bullish trend here, and it's attempting to hit new all-time highs. So that's pretty interesting there. It's doing this on lower volume, which is notable. But immediate term, short term, the market does seem to remain in bullish trend. And then long term, I still remain very bullish because at some point we're going to get a very great buying opportunity in the markets. That, as well as with the large debt refinancing that's supposed to come from the trillions of dollars in refinancing that needs to be done this year. That's also something that I'm looking forward to as well. But if you guys have any questions, you can go ahead and leave those in the comments below. Let me see here. What's up, everyone who are joining from Instagram? How we doing? How about from TikTok here? Blam, thank you for the heart. Shan, thank you for the follow. Awesome. Yeah, so it's pretty interesting stuff that's going on here. The CLI Diffusion Index is really something that I'm paying attention to. This could... I've been trying to look for when this went negative And so seeing that it was flat between September all the way to December, that was a 3-month rate of change. And so I was really looking for this deceleration, which is what we got here in the last couple months. And so, yeah, this is something that I highly recommend that people track and follow and add to their charts. Taking a look at the dollar, essentially the way that my team and I like to start our analysis every morning is always with the dollar. And so when taking a look here, it's having a little bit of a rebound here from previous resistance. And so it is trying to find support. Now, if the dollar does continue to decline from here, you want to make sure that you're not only invested in things that are in bullish trend, but also things that are in bullish trend in an opposite correlation to the dollar. And so, right now, unfortunately, Bitcoin is something that is not oppositely correlated to the dollar just yet. It still has a neutral position to the dollar, but it is starting to break trend here. Our signal went bullish last week, and so we were taking things to a minimum. And so, things don't look too great for Bitcoin as of right now. I mean, volume has pretty much been nowhere. And now that volume is ramping up, it looks like it's starting to, have a little bit of a drawdown. Altcoins just continue to get crushed like crazy. And luckily, our macro indicators were telling us to get out of altcoins all the way back at the beginning of December, when the majority of people were saying that the next leg up in altcoins was about to happen. Man, crypto Twitter just keeps on going crazy with the altcoin cycle, when really the macro was calling for the exact opposite. So that's why if you're in crypto, you do not want to ignore the macro environment. You want to make sure that you're learning that in this post-pandemic environment. Taking a look at some of the sectors that had significant changes. One was tech, so XLK. That, along with Qs, remain in bullish trend. What's interesting is that we had a large acceleration in NVIDIA today, which, if you guys were selling it into today's strength, that was the right move. Now, NVIDIA did turn bullish in our model at the close of last week. And so in the matter of just 10 days, this went from bearish trend to bullish trend, which it can happen that fast. And so what I was telling people last week is that according to our process, if it did go bullish, which it did, we're not chasing here. You'd rather see some type of correction to the low end of the range so that you can buy on a dip, because you just don't want to chase green candles. But it is interesting how NVIDIA did change trend. Apple and Microsoft remain bearish, as well as Google and Tesla. And then Meta also remains bullish and is having a little bit of a pullback itself. And so because the majority of the mega caps are having a little bit of a pullback, you can see if we just take a look at the mega caps together, you can see that it's having a pretty decent sell-off day today, which is the reason why the market is pretty much peaking out. If you take a look at the S&P 500 minus those mega caps, you can actually see that you're having a broadening out effect. So stocks that are not in the Mag 7, those are actually continuing to accelerate. And so you're having more of a lean into value over growth, which is pretty interesting. Normally you don't see that unless there's a big shift in the market, which there could be, and it's something that we've been talking about for a while on this channel. AVGO, Broadcom, remains in bullish trend. So does Berkshire Hathaway, as well as Walmart. So the reason why I show these three is because these are the other three that are out of the top 7, but are still remaining in the top 10 in terms of market capitalization. If we go over to some of the different ETFs that are performing well this week, the main one being natural gas. So this one continues to accelerate. We were talking about this last week, how there was an opportunity on Thursday, and look at that. It's having a really big push to new local highs, a 10% move. So this, if you guys have been paying attention to the channel over the past couple of weeks, we've been talking about natural gas, and now it's up over 10%. So if you guys were able to pop into that one, congratulations. Make sure you're taking some profits on that, as that's a big move in the natty gas. And then also as well, let's see, when taking a look at the semiconductors, so for example, XSD, this is continuing to have a rebound but it does remain in a less of a bullish trend if you compare to something like Nvidia. There's also this one, the VanEck semiconductor ETF, that is also in a better trend than the XSD. Let's see, which other ones are we looking at here? Oh yeah, in terms of international equities, the best performing one that my team and I were looking at was Austria. So the ETF for that is EWO. Now, if you want to look at things that are doing well, and if you're upset that your Nvidias or your Bitcoins haven't been doing well, look what Austria has done just since February has began. That's up nearly 13%. So this is also why we use macros, because we can shift our asset allocation into things that are actually working. And so we don't have to just stick with the tickers and the bags and hold them until they go back up and just, stare at the wall and watch paint dry. We can actually move our asset allocation into things that are performing well and are currently in an accelerating bullish trend. And there are some other international ETFs that my team and I like, which if you want more information on that, you can check out the community research that we publish every single day in our community. If you want to learn more about that, you can use the link in my bio there. And then let's see, in terms of, let's take a look at, there wasn't really too much in industries. That's pretty much all I'm looking at in terms of the different ETFs that remain on my list on things that are continuing to make money in the portfolio. What I am looking at as well is a shot at copper. So copper is having a little bit of a pullback. And so this is something that continues to be in bullish trend, and all of a sudden it had a dip this morning, which presented a buy opportunity there. So that is an example of something that's in bullish trend that had a decent pullback. So if you guys were buying copper this morning, that was also the right move. And then let's see, we really didn't get too much of a chance on gold. Gold just continues higher. I know that we covered a lot on gold on Sunday's macro wrap up, only because we've seen a large appreciation and a lot of demand, not only from global central banks in gold, but also with the private sector, private commercial banks like JP Morgan. So, yeah, I continue to believe that gold and silver are going to do very well in the stagflationary environment, which they usually do. What is interesting is that we continue to see credit spreads remaining at incredibly low levels. And so there's still a lot of risk taking that's going on in the markets. It's just in a select few amount of assets. And so seeing that this risk taking is going on, it's no surprise that we're seeing some of these squeezes here. And so if you start to see this go bullish, meaning that the spread is widening, that most likely will be a signal that the market is getting a little bit more cautious, and maybe there could be some more risks that are coming in, similar to what we saw during when Jerome Powell had the December Fed meeting, and they announced that they were going to be a little bit more hawkish, and so this accelerated on that, right? And then the market had a little bit of a flash correction. If that continues to go upwards from here, which I wouldn't be surprised if it did, then you could see more headwinds for the S&P 500. And so, as you can see, it hasn't been this low since June of 2007. So this is pretty significant levels of credit spreads that we're seeing right now. And with the market slowing down in terms of momentum, as well as leading indicators starting to show some softening, we really have to be careful here. Not saying that there's no opportunities, but we do have to remain, cautious and having a tight leash on things. So with that, I'll go ahead and see what type of questions people have in the chat box here. First, taking a look at Instagram. Let's see. Hiking with _Cass. How's it going? Hey, Johnny, I've learned a lot from you. Appreciate that. Wondering if we can look at TEM. Sure. Yeah, this is Tempest AI. This is Nancy Pelosi's darling, and that thing just continues to rock. Yeah, this remains in a bullish trend, and Nancy Pelosi is making millions of dollars off this thing like she always does, that shark. I don't know how she does it. She must be, unless she's getting insider information, I mean, she's the greatest trader of all time. So we're lucky to be in her presence. Very exciting times right now. But yeah, it does remain in bullish trend. A little bit of a correction here. I wouldn't be surprised if it has a further correction. But it is a single stock, low in terms of market capitalization. I would just be cautious here. All right, taking a look at the TikTok chat. Shan, thank you for the follow. Pepper Far, thank you for the follow. Supreme, appreciate you sharing the live. What happened to Meta? I mean, Meta has just been having a correction after going up a lot. Things just don't go up in a straight line. If you were looking at this, pretty much since February 5th, this rally here was on lower volume, and so that was the time to, right here is the signal to take some profits if you guys were long Meta. Thursday has Japan interest rate decision. Will it impact the dollar? Yeah, I mean, if Japan continues to raise rates, which I think they might continue to do, or they might hold it here, that has significant impacts with the dollar. Yeah, that'll definitely push down the dollar. I mean, it already has already. Bucks. Maybe I hit the wrong one here. Was that Biomark Diagnostic? Peeth Artai? Not sure if that's the right one. Good. Big Bear. Yeah, Big Bear remains in bullish trend. Catherine, didn't you ask about Big Bear last time? Oh, on the Budapest Stock Exchange? Unfamiliar, but we'll look at it. Let's see. Yeah, I mean, this is definitely in a bullish trend. A lot of emerging markets have been very bullish. So, not surprising that Hungary is also doing well. Bitcoin and crypto outlook over the next month or two. Yeah, so I mean, Bitcoin I think is signaling, a much larger macro signal. And so let me just go to it here. Yeah, so if you notice, Bitcoin has dropped off in volume a lot since the beginning of February. And so with this drop off in volume, it's had a consolidation. And now that volume possibly might be ramping up more. That is not a good sign, especially if it's having depreciation in price. So if prices are falling on accelerating volume, that's really not good. And so you got to be careful with something like Bitcoin, because a lot of people who may be new to investing in Bitcoin, forget that it can fall pretty quick. I mean, obviously, over the past year we've seen that a lot. But for those who weren't trading Bitcoin back in 2021, you can't forget that over a period of just 7 days, Bitcoin went from 56K all the way down to 30K in just 6 days. And so, yeah, that was a 46% correction. Not saying that would happen again, but you have to understand that Bitcoin is still a risk-on asset. This isn't something that's a safe haven. This isn't, maybe one day it will be, but as of right now, it's still positively correlated to the stock market and is a risk asset. And so I think a lot of new Bitcoin investors have not yet experienced the full volatility of what this thing can do. I certainly have, being invested in it all the way since 2017. But for me, when I look at some of the long-term indicators for Bitcoin as well as some of the on-chain metrics, there are some things that are showing that we are definitely in the later stages of the uptrend. I mean, you can just look at a chart. You don't even need to look at on-chain metrics for that. I mean, look what it's done since its bottom in December of 2022. I mean, it's had some sideways actions, namely from March of 23 to October of 2023, and then from March to October again of 2024. Isn't that interesting? We usually have these large upswings early on in the year, and then it goes sideways for a little while there. But you know what you want to look for is a big reset in Bitcoin's price and a huge shakeout. One of the things that I look at is the percentage of Bitcoin supply that is in profit. And so what I can do is I can bring up a chart of that real quick here. This is something that is public information, but it is one of my favorite on-chain metrics. And so if we take a look at a chart of that, let me take off the price point. So this is a chart of the percentage of Bitcoin supply that's in profit. And so as of right now, there 83% of all of the Bitcoin circulating supply, as far as the initial purchase price, is in profit, which is still very highly elevated. Once this gets below 80 and into the 70s, that's typically where, if the macro says that that Bitcoin could come back, that's where you would typically want to make some positions there. As you can see, the best time to do that was, back in August of 2024, when it went all the way down to 70%. And so this, along with other on-chain metrics, are showing that, we could be having a bit of a slowdown here. And so you definitely want to remain cautious, especially since our signal just went neutral for Bitcoin. What website is this? This is mesmerdata.com. So you just go to Mesmer Data, and you can just go to the on-chain metrics for Bitcoin supply and profit. Good question. What are your thoughts on FTNT and WRD? Yeah, we can take a look at those. Fortinet? Not sure what this company is. Looks like a small cap. It does appear to be in bullish trend though. So, and WRD. I'm not sure what this is, but it's had a pretty large jump. No clue what this stock or company is though. Packaged software technology services. Okay. Yeah, it looks like a brand new company or just went public. So yeah, I don't know. Too small for me. If anyone invests in Bitcoin proxies, make sure tight stop losses are in place. Yeah, exactly. Are altcoins a bad idea right now? I mean, you can make your own decisions, but our signals are showing that you want to stay away from altcoins. Specifically, Bitcoin dominance continues to accelerate in a bullish trend. You have Ethereum versus Bitcoin remaining in bearish trend. Solana versus Bitcoin just went bearish. It's no longer neutral anymore. AVAX versus Bitcoin is bearish. XRP versus Bitcoin is still holding up, but is neutral. If we just do the total market cap of crypto, excluding the top 10, that dominance. So essentially altcoin dominance is in bearish trend, as well as DeFi dominance is in bearish trend. So yeah, I mean, there's not really anything that's signaling to me to go back into altcoins at all right now, unless you have a select few, which there are. There's about 4 coins that we look at as a group where we would consider buying. I guess we can talk about one of them. One of them is Mantra, OM. This thing has been an absolute like champion in our crypto portfolio. We were talking about this one pretty much around like 80 cents or so. And now it's around $7. And so, yeah, this thing has been up nearly 8x since we were first talking about it in our community. And yeah, I mean, out of all the altcoins, Mantra has been, one of the best performers. Really like that project. There's a few others as well, not just Mantra. Thoughts on gold moving forward this year as inflation remains sticky, uncertainty of trade wars? Yeah, I mean, gold can continue to do well in that environment. Yep. I'm not Jay. Thank you for the follow. Kevin Send It. Thank you for the follow. Thoughts on Alibaba? Alibaba is bullish at this moment in time. Yep. Wouldn't be chasing it here, though. I'm not Jay says, I did believe altcoin season was hitting on February and ending about end of May. Yeah, I was DMing one of my followers, and he was just telling me a little bit about his experience investing in the crypto markets, and yeah, he was the same thing. He saw like everybody talking about how the cycles are the same. It's going to be the same. Altcoin season is around the corner, but none of the macro data was supporting that at all. Not even the math was. It's something, if you go back in my videos around when everyone was saying, another altcoin season was going to come about, I was one of the only voices out there, not to like, I'm not trying to brag. I'm just trying to tell you that like the macro is saying something completely different. And so let me see what I could do is I can bring up exactly where that happened here. Let's go to Chrome. Yeah, so it's essentially when looking at the macro as well as Bitcoin and altcoin dominance, that's what tells you, that's what gives you the tell. And so I had posted this joke, not to like, I just like sometimes posting these jokes a little bit, but altcoin season was November 21st to December 12th. It was only 2 weeks. That's about it. And that was when Bitcoin dominance was selling off. You don't have to be too fancy. Just look at what the dominance is doing in relation to the macro, and you'll have full confidence of, if we're going to have a altcoin season or not. For some reason, people like to stick to old playbooks when we're in a different playbook post-pandemic. But, this is why paying attention to the macro environment, even if you're a crypto investor, will help you immensely. All right, NQ. Yeah, NASDAQ is bullish. No, I mean, altcoins aren't necessarily always a bad idea. I mean, if you risk manage it appropriately and the macro environment says that you have a high probability of success with investing in altcoins, then you can do it. Humble Be Love, thank you for the follow. What is Mantra on? It's on Ethereum. Yep. So, that's one other thing that I'm looking at as well is take a look at the reverse repo facility. So this is, something that's been a hot topic as of late. Let me take off a couple of these indicators here. So this actually continued to decelerate even further past my $100 billion line here. And so the RRP is now at 58.7 billion. I mean, this is This is just crazy low. And so this is what's been floating the markets. And when you take a look at the net central bank liquidity level, it is just barely holding on to this 5.93 trillion. What's been very interesting is the rising level in the Treasury General account. And so to me, this cash raising, which ever since Trump's inauguration, what's really interesting is that ever since the Trump inauguration, this thing has been accelerating. Since Trump has been in office, this has gone from 643 billion to 830 billion. And so, you can think of this as the Treasury Department's checking account that's held at the Fed. And typically you want to store this up when you're thinking about having to deploy it in some type of, crunchy situation, right? Similar to like, just think about if you were in credit card debt by a lot and you had a payment coming up that you really needed to make, otherwise your credit score was going to go, crazy down, and you might have to default on yourself and go and file, personal bankruptcy, really bad stuff, right? What would you do? You would probably be looking into which areas of your spending that you need to cut back on so that you can save money, as well as start to save money so that you can pay off that credit card bill so that you don't, fall into that, into those bad situations. And so seeing that ever since Trump came into office, that the TGA has been accelerating, you can almost think about that in an analogous way. And so I think one of the biggest challenges this year is going to be the large debt balance, trying to get that down. So far with the actions of Doge, it's great that they're finding a lot of this, excess spending that could be cut. But the thing is that, they're finding things that have already been spent last year. And so it's not necessarily taking money away. It's just reducing slight future spending. They really haven't dug into the large ones, such as the Department of Education and other things that will get into the trillions of dollars, which could make a dent. But in any sense, when looking at the S&P 500, we know that when looking at a longer term time frame, that government spending has been playing a huge part in the reason why the market has been, doing very well. In fact, let me just go to, where is it here? Let's go to, where is it? Central bank liquidity? No. Oh yeah, macro indicators. And then we'll go to, where's the government spending? Is it this one here? I think this is it. US GSP. Yeah, I think that's it. Yeah, so if we go back to the SPY, and then we overlay government spending, no. Let's make this a bright yellow so that we can see government spending. Let's zoom out here a little bit. Whoa. Take a look at that. Man, the S&P 500 bottomed about 2 months right after government spending started to really accelerate. That's kind of strange, isn't it? And then pretty much government spending hasn't stopped accelerating since that time in 2022. Since then, expenditures have increased by about $500 billion have been increased by government spending. And that makes sense since there's a large deficit that's happening right now. So, what happens when government spending is cut off here? Similar to when government spending really started to decelerate, that front ran the top in the market by about 8 months. That's pretty interesting too. So we should probably be looking for a deceleration in government spending, as that has had a significant role with this post-COVID S&P 500 here. Huh. Interesting how that works. But I'm curious to know your guys' thoughts too on that. XRP is an altcoin? Yeah, it is. Do you think gaming coins will make good multiples? Possibly. You know, that could be a huge thing that AVAX does. All right, and then lastly, what we'll take a look at is going back to the OECD CLI Diffusion Index. And so I wanted to explain this a little bit better for everyone, only because I don't know why it seems like this hasn't resonated with too many people. But I've been watching this for several months, and we finally started to get a deceleration. We got a cross back in July. And typically when a cross happens, that's basically the timer starting between 9 to 12 months of a market top. Of course, this time could be a little bit different, either more or less, but you cannot ignore this deceleration here. And really, there was a cross just recently. And so, this puts us at anywhere between March and June of a potential top in the markets, and then a potential bottom around February of 2026. And so that's what I'm looking at here momentarily. But that timing could change depending on what happens next. Thoughts on getting SPY puts out to April 31st? It seems like the market is too parabolic. No, so you wouldn't be buying puts to try and gamble on a market top. That's not what I'm trying to say here. What I'm essentially saying is that, you want to be a little bit more cautious with your longs. But the fact of the matter is that the S&P 500 remains in bullish trend, and so you never want to short something that's in bullish trend. Even if you think long-term there's some risks that are out there that could bring it down, you just don't want to just short something or buy puts just because you think that things are getting toppy. If that drop happens, what's the best thing to invest into? Well, it depends on what type of drop is happening. So you have crashes, which everything typically goes down, or you have drawdowns, which is where, like in 2022, that was like an 8 to 9 month longer term drawdown where there wasn't really a crash. It just really chopped down. And so in that environment, you would go to defensive stocks, more defensive cyclical things, healthcare, utilities, things like that, things that do well in a more defensive environment. All right. Well, with that, I'll go ahead and wrap it up there. Again, if you guys want to finally learn how to use macro in order to stay ahead of these market trend shifts, I highly recommend that you start with a 7-day free trial of our macro investing community, where not only can you learn all this macro data for yourself, all the things that we track, but we also have some reports in there, some daily reports that can give you what we're bullish and bearish on every single day and what we're currently invested in. So again, just go to the link in my bio there, start your free 7-day trial. If anything, you can cancel it before the 7 days so that you're not charged the $47. But even if you do stick around, you have market direction and confidence for less than a cup of coffee a day. So I appreciate everyone for joining, and I will catch you in tomorrow's daily macro update. Bye.